On the 1st of February 2024, my life completely changed forever. Now, was that for the best or for the worst? I guess time will hold the answers to that question. But it was definitely a significant time within my investment journey. It was my first ever deposit into trading 212. Now it's £1,500, I believe, and don't get me wrong, very, very fortunate to be able to invest that sum of money at that stage of my life. And in today's video, we're going to be unpacking the journey so far, where I'm at currently today, some of the stocks and ETFs that I'm holding in my portfolio, and the overall growth of my journey so far. But to understand how we got to that point, we first need to understand what's going on short term currently in the markets today. Now, it's completely no surprise that the US runs a trade deficit, which essentially means it buys more from other countries than it sells, right? And what Trump has done with these insane tariffs is to essentially punish the countries that are in a surplus to the US by imposing crazy tariffs and taxes on them, right? This is obviously trying to fill the US trade deficit, which Trump is trying to essentially bring more capital into the US. But did this work? Well, not quite. He did impose a 90-day pause or break on certain countries with these crazy tariffs. Now, genius, madman, I think he's a bit of a joke, man, and kind of does what he wants, really. But we all know that these tariffs were not sustainable for the long term. Now, breaking down this report from Wharton, we can see that Trump's tariffs and his overall policies is to generate significant revenues for the US economy. Now, the tariffs are projected to be a substantial form of that revenue coming in. However, it will have severe effects over the long term of the US economy and affecting the US people and the overall US businesses. And this is kind of backed up by the point that additional revenues from these tariffs will reduce the federal debt by around 7.3% lower in 2030 and an additional 11.6% up to 2054. So we can see the kind of thought process here, but the logic and the rationale doesn't really make sense for Trump to really do that, and we can all kind of agree on that point. And a big reason why I even think the 90-day pause on the tariffs, because if you look at the stats of household income will lose around $22,000, that is an effect on the tariffs as well, and it's affecting the US people from that perspective. So it logically doesn't make sense for Trump and the US to isolate themselves with these irrational tools, making enemies rather than friends globally. But to summarize this report, and again, if you would like to read it, I've linked it down below in the description. The overall plans for the tariffs is to generate significant income for the US. However, this whole model and the Wharton projection has essentially shown us that there are severe economic consequences for the US, and this means a reduction in GDP, decreased in household income, and as well lower wages. And the overall assessment indicates that long term these tariffs will have significant effects on the US. Now, as a long-term investor, why is this still important? Well, it's important for many reasons. One of them is a psychological reason. Now, mentally, risk and volatility can create fear within people. So within this risk, there's obviously reward, and that's what we're looking at. We're looking at opportunities to get ourselves involved in favorable stocks at a discount, and that's exactly what we've done. So it's important to keep an eye on these factors, but not to hold them hostage to yourselves. These things can still happen again, as obviously Trump's within presidency, and a lot of these things are irrational. So it's still important to waver out the short-term noise, but take advantage of times like this when they do present themselves. Now, jumping onto trading 212, we can see the portfolio is valued just under 26k, which is amazing, and we have been continuously adding to our investments and diversifying into specific stocks and ETFs as well. Now, we hold currently just under 150 shares of the S&P 500, so it's by far my most dominant position, although we have added something slightly similar to the mix. We've added our Vanguard FTSE All World, which is still dominated by US equities. However, there is a diversification aspect to it, which means this fund will invest in Europe, it will invest in Asian companies as well. So we've got quite a all-weather type approach there, and we're expanding our diversification beyond US companies. Now, although I hold 11 shares of this ETF, I do want to bring this up to a similar amount to what I hold in the S&P 500, as I'm still getting the gains of the US, but I'm still keeping the approach quite broad, and this ETF will update as well. So new companies will be added to the portfolio and companies will be taken away depending on performance and overall market conditions. Now, probably my favorite stock in this portfolio, Alibaba. Now, again, it's a bit of a controversial one, but in my opinion, I think financially this is a fantastic company, although it does hold risk with it. One risk, it's a Chinese company, and the way China works is different to the Western world, and they're not so focused on private companies, but we have seen some slight improvements, even the CEO having meetings with the president or the government of China as an example, which is positive news. Now, again, the reason why this is a favorable company for myself is because they are leading in AI and they are constantly innovating. The company is growing, the company is buying back shares, which basically means that the shares you currently hold become more valuable. It's supply and demand essentially. So they're buying back their own shares, they're backing themselves, which in my eyes is a great thing. Now, this is definitely one that is performing quite well, and it's one that I'm looking to hold for quite some while, as even if we look at the prices, we haven't even recovered from back to COVID. Now we can even see companies like Apple who are looking to make partnerships with Alibaba, which is great news, especially for the overall development and their corporate strategy, which in my eyes can only bolster the stock and add value to the company. So even if this stock goes up back to COVID levels, or if it goes to zero for whatever reason, in my mind, psychologically, I've written it off. It's something that the risk I'm prepared to take, as I personally at the moment am backing this company. Now at the moment, I'm not going to invest any more capital into this stock, as I don't want to be exposed too much to China, and I think having that position there definitely gives me a good stake in the game. Now next we have Amazon, which has seen a lot of decline so far in 2025, dropped over 30% year to date, and a lot of this is obviously due to the tariff concerns, and there is slower growth in specific areas of the company. However, Amazon still generates a lot of cash, and not only that, Amazon still has their cloud infrastructure, which is driving a lot of revenues to the business. As we saw with the tariff concerns, this stock did plummet a little bit, and that's where I decided to take advantage of this company. As personally, long term, I think Amazon's a great company. A lot of us use Amazon products as well, and if you're looking at their financials, they are growing year over year, so it's definitely one that I'll be holding for the future. Lastly, we have two baby positions here. We've got Google and we've got the emerging markets ETF. Again, I've got larger positions on my free trade of Google. I'm not too sure how many shares I have in total, but I do have another investment in Microsoft as well on free trade, but we're not going to touch on that. We're going to focus on the main portfolio in today's video, so you guys can kind of see more of an update of what we have achieved so far. So looking forward, again, the market is still in uncertain times. We don't really know what's going to happen, and nobody does, right? And that's the beauty of it, because opportunities do arise. Now we're sticking to the overall plan. I'm not going to be investing in any particular stocks for the moment unless anything drastic happens, but I will be sticking to investing in the S&P and also the all world index as well. Now, if you found this video helpful at all, feel free to give it a like and subscribe, and check out my previous video here, as it might give you a bit more of an understanding of where we also began with the portfolio. So check out that first update.